Friends, this is our second release on the critical issues on implementation of TCS on sale of goods from 1st October, mandatory for those taxpayers whose turnover is more than 10 crores. We will discuss only the critical issues, queries which have been asked from us while implementation and what we have dealt with while implementing this 206C1H in companies. So the requirement is that any taxpayer whose turnover in the previous year is more than rupees 10 crore, if he sells any goods to a recipient where the value of the transaction in the previous financial year was more than 50 lakh rupees, then the supplier in the case has to charge TCS or has to collect TCS on the amount collected from such customer over and above 50 lakh rupees. In simple words, if you are selling goods to a customer whose value of transactions in a year is more than 50 lakhs with you, then you on collection of the amount from the customer have to deposit 0.1% TCS and the customer would get a credit of such TCS. From 1st October 2020, the rate is reduced to 0.075% and from 1st April 2021, it would be 0.1%. So the question is, how do we do this? We have explained that one has to disclose such amount on the invoice itself due to practical issues. What are those practical issues? We will not repeat. We have already clarified in the last video. Next question was whether this TCS is applicable on the GST amount also. We have answered it in the affirmative. Is this TCS applicable on branch transfers? We have answered it in the negative in our last video. So there were some of these issues and further other issues which we have clarified in the last video. We take on further issues in this video which we have faced during implementation. Now a practical issue is that if you want to collect such TCS on the invoice itself, do you include it in the invoice value? Because there would be a practical issue that the customer, while paying you the TCS, he would want to have this TCS amount on the invoice itself. Well, friends, if you see the way ERP works, right, because we have to take care of GST, ERP as well as income tax in this case. So you would require data from GSTR1 also where this TCS would not be disclosed. So may say the transaction is of 100 plus 18 rupees GST. In the GSTR1 you would require 118, right? And you want to disclose this 0.1% or 0.75% on the invoice itself, right? So that the amount comes as payable to the customer and he can pay you this 0.1% in addition to the invoice value. It may be a good idea. Well, this is not written in the law, but I am only clarifying a practical difficulty which might be faced on implementation. So maybe on the invoice you can add two more columns. Taxable value 100, GST 18, total invoice value 118, add TCS 0.1%, say 0.18 rupees, total receivable 118.18. So in this way your ERP still captures for GSTR1 118, whereas the customer is also happy that 118.18 is available on the invoice itself, right? This may be a midway solution, but again, there are various other ways by which you could do this. The next critical issue is that what happens to the amount collected post 30th September for which bills was made prior to 30th September. Say you have made a bill on a customer of 1 crore, right, plus 18 lakh GST on 25th of September. However, you collect the amount on 5th of October after 206C1H is implemented. Would you be liable to pay TCS or deposit TCS on this 1 crore 18 lakh also? Well, there is no circular from CBDT in this regard, and as the law stands now, the amount of TCS is to be collected on receipt of the payment. So if the receipt is happening post 1st October and TCS is applicable to the instant taxpayer and the instant customer, then it might be a good idea to comply with the law and deposit such TCS, and possibly as an adjustment entry or as a post facto debit note, one can collect this amount of TCS from the customer, right? The customer would not face any hardship because it would be getting the credit under 26AS and it could claim it as a set off against the income tax payable. The next question again is, this 50 lakh per customer, what do we do? Do we see the last year's turnover with the customer or the current year's? Again, while the law talks about previous year, one must take a prudent call in this. Again, a contradictory opinion is very possible until a CBDT circular clarifies it. So what we suggest, if you want to take a prudent call, see what is most beneficial to the interest of revenue. If, for example, you have a customer with whom your transaction value has been more than 50 lakh in the previous year, even if it is less than 50 lakh in the current year, please apply TCS on the billings to such customer. If on the other hand, in the last year, the billing to the customer was less than 50 lakh and this year it has crossed 50 lakh, even then you must apply TCS to the customer if one wants to take a prudent call. Again, the customer would not be under hardship because he or she would be getting the credit in the 26AS for such TCS collected from it. The biggest contentious issue today is whether to reverse this TCS on credit note or not. Again, in absence of a CBDT circular, various views are possible, right? Now, credit note can be of various kinds, right? It can be a price revision, it can be a discount, it can be a cash discount, it can be on sales return, it can be of paybacks, right? The industry, one does not even know how many kinds of credit note industry uses, and we have all faced it while GST implementation. So again, a view can be taken that no, the credit note is not a receipt of payment, and therefore the corresponding TCS which was charged in the original invoice, that is required to be reversed in the credit note. Another view is that no, the credit note can be deemed to be a receipt of payment, and if there is no linking of the credit note with the original invoice, or the original invoice TCS has been paid to the government, then how do you plow that invoice back, or how do you make a reconciliation, right? And such a reconciliation would be very, very difficult to make and present before the assessing authorities in future. So possibly again, again I am saying another view is possible, but a midway view would be that on those credit notes where there is a sales return, there the TCS can be reversed, and on all other credit notes like price adjustment, discounts, etc., maybe the TCS once charged or collected, maybe that can be forgotten and no reversal can be made. Another more prudent view can be once charged, forget the TCS. Do not reverse it on any credit note, right? So one can decide on a prudent basis on what decision one needs to take in the instant case. Another issue is there are various notifications whereby TDS is applicable otherwise, but due to the notification, TDS is not charged. The question is, in those cases, considering the proviso in 206C1H, would TCS be applicable? Again, the law says that the TDS has to be collected and deposited, and only then TCS is not applicable. Therefore, it is always a prudent view in absence of CBDT's circular in this regard that in case no TDS is collected in a transaction, then it is always better to apply TCS in such a transaction. So friends, these are the various issues which we have faced during implementation of TCS under 206C1H. In case of any other issues or queries, you might feel free to mail us or get in touch with us. Our whole team across the country is available for answering any queries or any doubts on implementation of TCS in addition to GST e-invoices. Thank you very much.